Hello traders, Gary Wagner here. It is 12:05 in Honolulu, 6:05 in New York on Tuesday, 28th day of May, 2024, and this is the evening report for gold and silver. After a long three-day holiday weekend, both gold and silver recovered nicely, with silver taking off sharply. Gold gained $22 in trading this morning, taking the June contract of gold to $2,356.50. It is trading overseas in Australia, currently up an additional $5.70, taking the June contract to $2,362.20. The August will be the next most active, as first day delivery notice will occur at the end of this week. The August contract gained $22.40 in trading today, closing at $2,379.30. It is currently at $2,384.60 after accounting for a $5.30 gain in Australia. Silver is making a run up to the recent highs at around $32 to $33 per ounce. Today in New York trading, silver gained 5.37%. That's a net gain of $1.64, with additional gains coming in Australia of 17.5 cents. Currently, July silver is at $32.31. As we have talked about over the last couple of weeks, dollar strength or weakness has not played a significant role. Today, the dollar was up fractionally, up 0.02%, taking the index to 104.633. If you recall from Friday's weekend review, I talked about the fact that as gold came down, it was at a critical and significant level. The level was roughly at $2,320, down to the key psychological level of $2,300 per ounce. At the time, the simple 50-day moving average, which of course has moved up a bit, was right around $2,320. That really made that price point significant. The fact of the matter is that market technicians use the simple 50-day moving average to determine if a stock or commodity is in a immediate short-term bullish or bearish demeanor. As long as gold has been trading above the 50-day moving average, which has been evident since the end of February, we could easily derive that gold has been in a significant and strong bullish demeanor. Today, we identified a simple three-day Japanese candlestick pattern called a three-river morning star. The criteria for that pattern is it has to occur after a downtrend. That is absolutely evident. Secondly, the first candle is a strong red candle, usually the largest of the decline. That would be followed by a star, which is really a small bodied candle where the real body, the relationship between the open and closing price, is below the body, or in this case, the close of the red candle. And to complete this pattern, you need to have a green candle, which is created when the open is below the closing price and has a significant size. The larger the better, but it needs to go at least to the midpoint of this large red candle. That forms a three-river morning star. Market technicians, in terms of waiting for a signal, like to see confirmation. Confirmation would be gained on the following candle, meaning Wednesday's candle, if in fact it is a green candle with a higher high and higher low than the green candle formed in trading today. Lastly, I do want to take a look at silver. Silver has been on an absolute tear since the beginning of May, when it traded around $26 per ounce and broke well above $32 per ounce on a closing basis. This, of course, represents the July contract of $32 back a week ago on Monday, May the 24th. We did see prices decline, and we have a very similar pattern, almost a variation off of a Three River Morning Star. The reason it is not a complete or valid pattern is because this red candle that forms from the 3-day pattern is exceedingly short. However, if you combine it with the prior day where we saw silver drop from $32.20 down to the low of $30.50, that would be a significant drop. We do have a gap between today and yesterday, although we do not have a true gap in terms of the star or small body candle in the middle from the red candle that would begin the pattern. Nonetheless, it's a very close representation, and the combination of this strong 5.6% climb in silver today, along with gold's solid $22 gain, represents the fact that traders have re-entered the market, moving both gold and silver prices higher, and the recognition of this V key reversal pattern in both markets suggests that both gold and silver could be headed to higher pricing. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.